What's up, investors? My name is Artem Zikov, and in a couple of minutes you'll know what are 5 main differences between CAPEX and OPEX. And if you want to learn personal finances and investing watching side short videos, please consider liking this video and subscribing to my channel so you won't lose it. From Russia with love, I say thank you, comrade. Alright, so the main difference between capital expenditures and operating expenses is their purpose, as well as how are they acknowledged from the accounting standpoint, periodicity, predictability, and tax advantages. And if you want to learn what capital expenditures and operating expenses mean individually, feel free to watch my previous videos. And here is an example. Quick example: capital expenditures would be purchasing and maintaining fixed assets. Buying a factory, servicing a car, repairing an equipment, all these are capital expenditures. While salaries, rent and utilities are operating expenses. Alright, so as you might have already guessed, the first difference is the purpose of CAPEX and OPEX. The purpose of capital expenditures is to purchase and maintain fixed assets, such as equipment, machinery, vehicles and buildings. And by doing so, a company expects to expand its activities. Generally speaking, the more factories you have, the more goods you can produce. And the purpose of operating expenses is to maintain day-to-day business activities. You need to keep paying salaries, make rent and utilities payments and so on. If you stop paying your employees, they will simply quit and your production will be disrupted. The second difference is how these expenses are acknowledged from accounting standpoint. Capital expenditures are considered to be investments, because a company reinvests money back into itself by purchasing fixed assets and maintaining them. And like mentioned previously, this is supposed to increase the output, while operating expenses are just your regular day-to-day expenses. You have to keep paying them just to make your business continue operating. The third difference is the periodicity. Capital expenditures are long-term. You buy your fixed assets and expect to use them for more than 1 year. For example, a company might purchase a fleet of vehicles to use them for 10 years before they are replaced. But operating expenses are mainly short-term expenses. For example, salaries in North America tend to be paid bi-weekly, meaning that you have to cover this expense every 14 days. The fourth difference is the predictability. Capital expenditures are not so predictable. You can plan when to purchase fixed assets and expand your business, but you can never predict when your car breaks down or roof starts leaking. While operating expenses are more or less predictable. For example, if you pay rent during the first week of every month, you already know when the next payment is due. And the fifth difference are tax advantages. Capital expenditures are not tax deductible, but the value of fixed assets can be depreciated throughout the years of useful life of an asset. For example, if you purchased an equipment for $1 million, you can depreciate its value for 10 years, meaning that every year $100,000 will be recorded as depreciation expense, and doing so allows to maintain net income at an attractive level for potential investors. While operating expenses are tax deductible, they are subtracted from company's revenue before taxes need to be paid. And that's why some managers try to spend as much money as possible on things that will benefit their businesses, because the majority of such expenses will be tax deductible. After all, the same asset can be sometimes classified as capital expenditure or an operating expense. For example, if you have purchased a car for cash, this is your capital expenditure. But if you lease the same car, lease payments will become your operating expenses. Feel free to leave a comment if you have any questions left. Check my other videos to see if there's anything else interesting for you. Thank you so much, comrades.